Welcome back to Liberty and Finance. We're always delighted to have this returning guest. Andy Schectman is here every week for a weekly market update. He's the CEO of Miles Franklin Precious Metals. He joins us this Tuesday, February 20th, 2024. Andy, thanks for coming back on Liberty and Finance.
Good to see you again, Don again. Thanks for having me, buddy.
I've got a lot of background noise, so I'm going to have to mute myself pretty quickly here, but wanted you to see if you could kick us off on a topic that's near and dear to the heart of a lot of our viewers, and we'll watch for live questions to be added to the live stream. Folks, if you don't want to miss a chance to ask a question of Andy, make sure you're subscribed to Liberty and Finance on YouTube and then join the live stream, and you can add your questions right there. Andy, we wanted to talk about banks, BRICS, and bullion, among other viewers' questions. And one of the trends that you and I have been concerned about recently is the lag, the quiet, the surprising calm, given the face of so many risks that are facing us clearly and present dangers to our families' financial futures. But there's a turning of the page perhaps here, because just in the last few months, we've seen several high-profile people who have a lot to protect starting to reach out. And if you want to touch on that briefly before we start talking about the update on the plight of the banks and what's going on in the bullion market and with the BRICS nations. But what about this perhaps a new trend of people who have a lot to protect starting to take action to protect themselves?
Yeah, well, aside from a tremendous amount of insider selling of shares, we're seeing interest on a very significant level in terms of sophisticated family offices, in terms of financial advisories, very, very large, wealthy clients. The volume is very tepid, but the size of some of the orders that we are doing and the frequency in which it's happening with certain groups of traders and investors that I would classify as being very sophisticated is strong. And it's interesting. Most of the drive has come from family offices and financial advisories that are acquiescing to the wishes of the members of the family office and deviating from the traditional path that they have found themselves on. And so it's interesting to me that this is, I think, kind of telling, if you will. You know, you always see the biggest money move ahead of the crowd, and it's not because they're more sophisticated because they have more money. It's that they associate in circles where information is more fluid and more relevant and more timely. And so I think that is a trend that is undeniable, at least in terms of Miles Franklin. And you and I have discussed this offline, but I guess I would call that a precursor to what we could expect, kind of like we're seeing Silver Eagle premiums ratchet up and up and up and up all of a sudden over the last couple of days. And I wonder, is that a precursor to what we can expect to see here soon? I mean, and every single time it's the Silver Eagle that leads the way. And we've seen 2 or 3 or 4 price increases, little by little, 5, 10, 15 cents at a pop over the last couple of days. So, you know, little indications, if you will, that you look for some sort of a telltale of what's coming, and whether it be much larger orders by very, very sophisticated traders or seeing the Silver Eagle premium start to creep up. Maybe some people are starting to wake up after all, in what has really been a mystery to me, how quiet it has been in a world that seems a whole heck of a lot more concerning to me than anything I've seen over the last 3 years, and that includes being in the heart of a pandemic.
You mentioned that in addition to insiders, very high-level executives, sometimes the chief executives, selling major amounts of stock, sometimes for the first time ever in the case of Jamie Dimon, sometimes more than ever before, sometimes their entire holdings. It's been astonishing to see quietly. And as again, Brad Harris from FullSpectrumSurvival.com says, the official warning will always come too late. So at the same time that Yellen and Powell are saying, gee, we didn't see this CPI spike coming. Gee, we didn't see this coming. So the officials never see anything coming, but the people who have to protect themselves do. And that's going to lead us, I guess, naturally into discussions of other countries in the world that are protecting themselves in a huge way, a strategic way. But still on this topic of banks and protecting ourselves from fragility in the banking system, Fazdal asked, does Andy think that the bank program, the bank term funding program that saved Silicon Valley Bank, will be discontinued next month as it's supposed to, or will it be quietly renewed, or some other twist to make it look like it's I'm ad-libbing here to make it look like it's officially ended, but in fact the bailouts are going on.
Well, one would suspect that they'll probably find some other way of injecting money into the system. But, indeed, if they are true to the word and they cut it on March 11th, which will coincide very closely with the reverse repo market being drained, one has to wonder what that is going to do to the system. This crisis, if you will, of credit, this slush fund that has been available not only to the banks to reliquify them, selling their treasuries that were valued at 50, 60 cents on the dollar, selling it at par or 100% face value. That money has to be paid back. And that money has to be paid back supposedly starting March 11th. Now, the loans are being made up until March 11th, which in theory means that you have a lag, if you will. If they're still getting loans up to March 11th, that would mean that 1 year from March 11th is when all hell would break loose, because not all of the loans were made at the very beginning. In fact, many of the loans were made during this last few months where they were able to borrow at 4.7% and then give it back to the Fed in a different window and get paid 5.3%. Just the complete and total lunacy. But yeah, if they're true to their word, which I guess at this point, it's very hard to believe anything that they say. And we've been saying this all along, that rates aren't going to go down, and at least not in the foreseeable future. They will lose all credibility if they do that. And inflation is here to stay. And, just go out to dinner once and tell me that inflation is not really here. And it is here, and it's not going away. And it's, as far as I'm concerned, I mean, just look at the basics. How the heck do you pay for Medicare and Medicaid and Social Security and government military pensions on top of the $34 trillion debt obligation? How do you pay for all of these liabilities to the American public when the rest of the world are selling treasuries? Who's going to buy our bonds? Who's going to finance the ridiculous debt binge that the federal government is on? They're addicted to debt. Who's going to finance it? And let alone the nearly $10 trillion in 2-year treasuries. I think $8 trillion in 2-year treasuries that need to either be rolled over at higher rates now or paid off. Who's gonna do that? And how does that happen? And so I think inflation is here to stay and will only get worse. And so when you put it all together, we are running into some very dangerous times if indeed they do stop this and they do stop the funding program. You're looking at a banking crisis, and it would be hard to believe that they'll let that happen in an election year where you'll start to see a run on the banks. But, indeed, I would say the likelihood of this happening closer to 2025 in March, because, there are still banks that are taking advantage of this until March 11th, and those loans are good for 1 year. So don't expect something crazy to happen March 11th. I would say as we get into the following year, spring, the likelihood of some really big fireworks, I think, are fairly likely.
Yeah, not to steal any thunder from Alistair MacLeod, the former bank director, whose interview goes live tomorrow evening at this time, but he was talking about at expected higher interest rates as far as the eye can see. Why would any foreign holders of U.S. treasuries continue to hold them if they're going to likely get beaten down in value going forward as well? And the BRICS have other options that they've never had before. In fact, there's a question here. Let me go back here. We have a question from... Shoot, it was about the here we go, and that is Andy. It says, oh, it was about the whether you believe that the BIS and the Enbridge will support BRICS in some way in order to make this pivot away from the dollar more viable for them.
Well, the Enbridge is certainly going to be a big part of it. We've been talking about the Enbridge for about a year now, which is a way for these countries to, and I'm glad you brought this up because to me, this is a very important point. The Enbridge is a bridge that allows these digital currencies, these nations' currencies to trade with one another, sidestepping the SWIFT system, which is the way that the United States imposes, one of the ways they impose sanctions. And, maybe I'm guilty as well of focusing too much on the Russian finance minister's proclamation that, hey, we're going to have a unified settlement currency that will be pegged to a basket of commodities. And maybe that will happen, right? But look at what's been happening, right? If you look at China as an example, at one point they had almost $3 trillion worth of our treasuries. They're down to 700 or 800 billion. It's still a lot, but they are shedding treasuries at a rapid rate, the lowest level they've had in 16, 17, 18 years. And the same thing is true of many of these BRICS nations that are no longer bidding for our treasuries. So when you think about it, you know, we were told at the end of the August meeting that they would all go back, the finance ministers, to the drawing board, come back and present their findings for a common settlement currency. But in the meantime, everyone trade in their local currencies. And that is indeed what we are seeing, and more proclamations all throughout the BRICS nations, whether it be India, whether it be Egypt, Saudi Arabia, Iran, you know, Russia, they're all trading with one another using local currencies. And the difference, the delineation here, when we talk about that particular move, right, trading outside the dollar in local currencies, well, you know, we saw 20% of oil sales settle in other currencies this year. That's a big divergence. But as we continue to see this BRICS conglomerate grow, and there's another 35 countries that have formally applied and 20 that have expressed interest, and this mass adoption grows, and all of these countries agree to trade in local currencies. Remember, the petrodollar is not just the dollar being what oil is sold for. That's part of it. The other part was taking the excess and the reserves and putting it into U.S. treasuries. So number one, you start to chip away at the settlement status of the dollar, which is big deal, especially as we see more and more and more of these oil producing countries be part of the BRICS group, and all of these countries that produce the world's commodities as part of this group that always settled in dollars will now settle in local currencies. And instead of taking that excess, the excess currency that they would otherwise have just sitting there earning nothing, they would typically put it into U.S. treasuries, which are very liquid and very safe. Well, instead, what you're seeing is 2+ years, almost 3 years in a row, of the central banks, the people who know the playbook, not just the wealthiest, but the most well-informed, buying gold at levels the world's never seen. And now you're seeing all the exchanges being bled dry, a continuation of what we've been talking about for 3 years. What does that mean? That means they're selling treasuries, not rolling them over and reinvesting them, but instead buying gold. And look at this, look at how that's played out for the last 24 years. If you go back to 2000, gold has appreciated by 7.8% per year. The S&P, 7%. And the bond market, less than half of that. So you have no default risk, no counterparty risk. It's an asset that is not simultaneously someone else's liability. You have much less in the way of interest and inflation risk as it pertains to using gold instead of U.S. treasuries as the replacement for the reserve. So if they settle in other currencies and put the excess into gold, as it very much appears like they are doing, you will begin to rapidly, and I mean rapidly, chip away at the dollar hegemony. And I think it's important to note, you know, you look at what the lead analyst for Citibank said. I want to read this to you real quick. Gold, which is currently trading at 2016, could surge by 50% if central banks sharply ramp up purchases of the yellow metal, a possible stagflation, or in the case of a deep global recession. Akash Doshi, Citi's North American head of commodities research, told CNBC. But here's where it fits in here. He says the most likely wildcard path to $3,000 per ounce gold is a rapid acceleration of an existing but slow-moving trend, de-dollarization across emerging markets, central banks, that in turn leads to a crisis of confidence in the U.S. dollar. Well, I mean, how is there not already a crisis of confidence in the U.S. dollar with the amount of inflation, with the destabilization of the bond market, with the sanctioning and weaponizing and now confiscating? I think that those confiscation aspirations of not just sanctioning, but taking it to fund the Ukraine will have massive consequences where we will never be trusted again by literally anyone in the Southern Hemisphere, if not much more wide reaching. So I think this is happening, and it doesn't have to come under the guise of a common settlement currency yet. Maybe that's down the road, but the fact of not trading in dollars and not buying treasuries will have a very big effect, and I think it's happening right now.
As long as you're using the word confiscation or seizing, I'm gotta bring in this other question that was mentioned. It's a different venue, but Brad Tibble says, Andy, in a previous interview, you mentioned you prefer to invest in pre-33 gold only. Is this because of the historical value, or is there some other reason to avoid post-33 gold?
When I in the 90s, no one bought bullion, nobody. People only bought numismatics, and with $350 gold, you'd pay $380 for a gold eagle and $410 for a certified uncirculated MS-62 $20 Liberty. There'd be no reason to buy bullion when you could buy a 100-year-old coin that was safe from confiscation, was a piece of Americana, was a real piece of history that had much better upside potential for $30 more. Well, that was 9% more or whatever, but so what? And when I was accumulating those coins early on in my career, that's all I would buy myself. I never really bought it because I was concerned about confiscation. I bought it because they are really a true rarity. They're 100+ years old, and technically they would be safe from confiscation according to the way the laws are written. But there's something about them when you're looking at a coin from 1880s, 1870s, 1890s, early 1900s. You're looking at a coin that's 100+ years old when the world was very different. There's something to be said for it, and I think that the wow factor is you get that for free. That's great. And I've never ever met anyone who has looked at a $20 gold piece. Most people don't know that gold was money prior to 1933, but you put a 100-year-old $20 gold piece in someone's hands and it's universal. Wow, that is so cool. I think there's something to be said for that. So it's just, I was always drawn to them. I gravitated to them. But since 2008, the premiums got so high that I had to move away from it, because in reality, as Richard Russell said, in the end, it's about the number of ounces that matter. But you have to tailor that with, not being penny wise and pound foolish. And I guess if you were able to get the pre-33 coins in the same ballpark as the new stuff, yeah, I would do it. I do prefer it and always have. And there's something to be said for something that, it's not rare, but it's not common either. And it's just a really neat way to accumulate gold. Just my personal preference more than anything. And, do it the right way. And you do, in theory, have safety from any governmental shenanigans.
I'm going to have to ask the next question in a more generic way than it was posed, to make sure that we don't compromise anything that, could come back and be a legal liability for us. But because I know Miles Franklin and Liberty and Finance both have pretty strong opinions about companies that deal in bullion and do it in a way that preys on people's ignorance and make it difficult for them to shop around and make sure that they're getting a fair price. But the question generally says, from a well-known company that advertised on television, and I'll just say that, like many companies that advertise in this way, they have very famous spokespeople, they have a very glamorous ad and very glossy brochures and that sort of thing. And no doubt people who work with them get products and that sort of thing, and so they end up owning a serious solid asset. But just again, your top things that people should be watchful of when making sure that they're not being taken advantage of by some disreputable companies out there.
Nothing bothers me more than this. And I'm going to give people an example without mentioning. I had a conversation with this afternoon. He might even be watching this right now. I told him I had this interview tonight. And he told me who he was working with. And I try not to elevate myself by stepping on the competition. But I said, I bet you what you bought was fractional and stuff I've probably never heard of and this and that. And he said, yeah, most of it is. And I'm going to give you an example of the way these people work. And, they sold them one gold. I'm looking at the statement right now, and I'm not going to deviate from keeping privacy here, but they sold him one gold eagle, and then they sold him a bunch of quarter and half ounce, well, a quarter gold sea turtle. I have no idea what the hell that is. I've been doing this for a very long time, but his purchase price, and I don't know when he bought it, but it doesn't matter. The purchase price on the gold sea turtle quarter ounce was $780. We'll do the math. 7, 14, 21, 28. That's over $3,000 an ounce, right? For a gold sea turtle that I've never heard of. And I've been doing this since 1989, 1990. Or a gold quarter ounce phoenix that he paid $815 for. Or a gold Washington Monument quarter ounce that he paid $910 for. So, or I mean, it's pathetic. It truly is. These companies that sell this stuff, they are preying. They are predatory, and they are preying upon the public who goes to them because the spokespersons seem to have great integrity, and it's really awful. And it's a federally non-regulated industry. In my opinion, these people should be put in prison, and I'm dead serious about that. And I wish I could say, but I don't stoop to that level. I'm not going to do this publicly, but I can tell you these are the kinds of things. A quarter ounce gold Washington Monument, $905. I mean, and one gold eagle, right? I mean, I don't care when they sold it to him. Gold's never been that high. A gold quarter ounce American eagle right now would be, you know, what, $2,200-ish an ounce divided by 4. And so it's really disgusting. So let's just make it easy. You want to open up an IRA, hopefully it'll be with us, but I mean, just make it easy. American Eagles, Canadian Maple Leafs, 1 ounce, period. And you will never have problems. You don't need proof coins. Don't listen to what they're saying. Oh, you'll make much more money on this limited blah, blah, blah nonsense. You want to have things that if all of a sudden you need, I mean, what is your motivation? People are doing this because they're scared of what's coming. So the most important thing is to have immediate liquidity, not dicking around with anything. Immediate liquidity with every company in America. It's Coca-Cola. It's Budweiser. It's you know, it's just what everyone would recognize, period. And I think these companies that do this are beyond reproach and truly upset me. So you want to make it easy? Don't buy any of that stuff, nothing, and just stick with American Eagles current year or Canadian Maple Leafs current year, and you will never, ever, ever have a problem. Because if I don't know what these things are, well, I guarantee you're going to have a hard time price shopping or finding a real price from any company, because if I don't know what they are, that means I don't sell them. And if I'm a company that's doing $800-900 million a year, $1 million in sales per year, what does that say? That says that these companies know exactly what they're doing, and they're purposely doing this to mislead the public. It's awful, truly.
Quick question here that follows up on the concern about the stability of the banking system. Again, you know, we talked about that with Alistair, which go live tomorrow night. But a question from Jim Morrison says, Andy, do you think we will see a big bank collapse in 24?
I think there's a high probability, and I don't know how big it needs to be. I mean, yeah, I do. 100%. Look, I mean, you got all of the commercial leases and loans that need to reset. They're owned primarily 70% by the regional banks. You have the majority of the small businesses that their loans and leases are all held by the regional banks. You have these banks that are underwater, and rates are going to go higher. And all it will take is one bank to fail, just one bank to fail and be bailed in. Now, we haven't seen that yet. It will create a cascade. And I really do think ultimately that is what they are looking to do, is to call the banks. And you even have Powell coming out and saying that he expects consolidation, as he calls it, in the regional banks. And I do, to come out and say in 2024, yeah, I would have thought it would have happened already. I would say between March of this year and March of next year, it would be crazy to not see several banks fail. And how big they are and what is the catalyst, not sure. But yeah, we are not out of the woods, not even by a long margin. And I think, again, you know, you look at at it's not just in the United States, it's kind of a global cascade of commercial real estate issues. And, you're starting to see the recessions take hold in Japan and in Germany and the United Kingdom. And we're not immune to these problems and the commercial real estate problems that are very systemic. These banks are all tied together. Borders don't matter. So yes, I do expect to see more bank failures and maybe several between this March or between today and a year from March, which all of the lending programs would have expired by that point.
For those who have to take off at the half hour, I'm going to show some of the special graphics here so that you get a chance to tell people what we have on special this week, and then we can continue and just briefly after that. Hold on. So here we go. Okay, are you seeing this?
Yes.
All right, go ahead. Go ahead, Andy.
No, I mean, again, and I almost hate to put any special up. I mean, everything is on sale right now. And I'm dead serious about that. Everything is on sale. And so, whether you're buying Britannias or buying Platinum bars or buying pre-33 gold coins or Gold Krugerrands, everything is on sale. And it's as cheap as it's ever been. And this is at the same time that we saw 5.5 million ounces of silver delivered out of COMEX just earlier in the week. And tremendous deliveries coming off of everywhere, including the Shanghai Gold Exchange, which, we're seeing huge deliveries. In fact, 271 tons in January, the highest level on record, a 95% increase compared to 2023 and a 65% increase month over month. The big money around the world is accumulating huge amounts of gold and silver. And yet you find deals like this that are, you got to go back to before 2019 to see prices like this. And it's also important to note one thing too, when we talk about silver. Do you know right now we have silver at roughly $23 on COMEX, $25.65 on Shanghai, slowly turning up the arbitrage nozzle. And it's going to continue to happen that way. And everything is going to find its way over that way. And people will wake up and all of a sudden rush to get metal, which in today is very flush and low premiums and great availability. But like that can change because, the people who are watching this show represent but the pimple on the elephant's rear end. And the elephant has, by and large, no clue, and that's
we like to think of it as the tip of the spear. Thank you.
Yeah, well, either way, it's the same thing. And I suppose that's a nicer way to say it, but it's true, and I think it will take a bank failure. It will take an event. It will take something. And that's the thing. I mean, look at all the somethings that we see. And that's why I just scratch my head on the people. Are they watching the same stuff that we all are? Are they talking about the same stuff that we all are? And, I just look at even the equity markets reaching all-time high with breadth going this way and valuations go that way. Be a student of history and you will see that that's never, ever, ever, ever ended well. In fact, it will end very, very badly. And so these are all really, as far as I'm concerned, great buys in comparison to where we've been for the past 48 months.
We want to run through these quickly and then I'll close them off and I have a question for you.
Yeah, sure. So, I mean, look, $59 over spot for a Krugerrand, that's more or less, that's been wholesale price for the last 3 years. $315 over spot on the silver Philharmonic, the Britannia, again, that's been below wholesale for the last 3 years. And platinum, which, really has a very compelling story. This is as cheap as we've been able to get platinum in the better part of 4 years.
All right. Now you did mention earlier, and I think it might have a lot of people might have missed it, but I picked up on it because I've seen it happening both before and now, and that is the premiums are starting to turn around. They on the American Silver Eagle, they were as high as $15 to $17 over spot back in the depth of the COVID crisis or the Ukraine invasion, that kind of thing. But then they've been slowly drifting down over the past year and a half, and then they were flat for about 6 weeks. And now they're starting to creep up, and we've seen multiple moves up. That's not the first time that's happened. What has happened the last few times that's happened?
It's been a precursor to premiums on everything and prices on everything going very much higher. and massive distortions in the supply chain and disruptions in the supply chain. Look, any way you look at it right now, and I would throw Silver Eagles into this as well, even though they have higher premiums than anything, is that when you talk about asymmetrical risk reward, what can I invest in that has the lowest downside and the best upside? I don't see past silver. I truly don't. And I think it's very hard to look past it. And again, seeing the huge amounts of deliveries coming off of all of the exchanges and countries like India buying 400 million ounces in the last 2 years, it should tell you ultimately where it's going. So yes, when we begin to see Silver Eagles move higher, they lead the market, at least in the United States. And it can happen very, very, very quickly. It's interesting to see them moving up right now, because industry-wide, it's very slow. I mean, it is from a volume standpoint. It's not just us. I talk to everyone in the industry, and it's quiet. And, at a time when it's quiet, you would expect premiums would be going the other way. Well, that tells you, again, like I was saying at the onset, about the very large buyers that are always successful. I mean, listen to Rick Rule. He talks about the most successful trades he's ever made is when there was blood in the streets, when everyone was moving a different way. That's how the legendary successful investors became wealthy. They didn't buy when everyone was. They were buying when nobody was, and they were selling and repositioning when everyone was buying. That's how they do it. And when you see premiums moving up on Eagles this early in the year, when the allocations are fresh and coming out, something's not right. And I would expect that this will be, if it continues, certainly a trend that would start to pull everything up in premium.
Well, that's what I saw in the past as well, and it certainly seems to be a signal that things are turning, and it's important because people who have been watching for a point. It's ironic that I have a number of clients who are telling me to let them know when they see things go down so they can load up, and others who are been waiting to like buy a piece of property or something. They know they have to do some liquidating. They want to wait for things to go up so they can liquidate. So some are waiting and watching for a sign or a signal of a trend change, and that looks like a signal of a trend change.
I believe it is very much so.
We've got so many viewers out here. We've got 1,156 views, and so far here, hundreds and hundreds of people watching the live stream. Let's see if we can hit one more viewer's question before we have to wrap. One question here. We noticed on one of the specials, a viewer said, hey, how come there's a minimum of 50 coins for one of the specials? You've mentioned in the past that Miles Franklin generally does not have minimum order sizes. You want to reinforce for people that, that's just on that one special. Everything else has no minimums.
Yeah, normally we don't have any minimums. And there are some times that my primary logistics hub is in North Dakota. And there are some times that I will access another one here in Southern Florida where they are not as amicable to small orders, but they may have very, very attractive prices. And so it's a situation where 99% of the time we have no order minimum, and I would prefer having no order minimum. So it's something that actually kind of bothers me that when we do, I would rather just steer clear of it and have no order minimum. We'd like to help as many people as we possibly can, and I think it's wrong to impose an order minimum on anybody.
In a lot of our recurring clients that do order regularly, whether it's once or twice a month, do that. They'll buy one roll of silver coins, that sort of thing, whatever they can. And the only downside to that I'm aware of from the client standpoint is that there is a shipping charge of $15 on small orders less than 500 ounces of silver. But if they're willing to do it because that's how they can do it, then more power to them. So in most cases, it's just not this one special. No problem. So Andy, we always are grateful for your presence here. Your availability for these live chats is an extra special treat. Any final thoughts you want to leave with our viewers before we wrap up tonight?
No, I mean, I just think that things are going to start to get really interesting, and as we continue to see more and more information coming out of the BRICS with 200 meetings between now and the October big meeting, with the election rhetoric heating up, things are going to start to get very interesting. And And I think it's really important that people not pay much attention to what's coming out of the Federal Reserve. Everyone made such a um, big deal about the 300,000 jobs that were added in January that the BLS tells us about. Yet we're just beginning to see the layoffs. We're seeing companies like Xerox lay off 15% of its workforce, Wayfair 13% of its workforce, eBay 9%, PayPal 7%, Charles Schwab 6%, UPS 12,000 jobs, Citigroup 20,000 jobs. All of these jobs that are being cut, huge layoffs that are happening after the BLS announces the increase in jobs. Those increase in jobs are at the expense of high-paying full-time jobs. These are jobs that are 2 or 3 part-time jobs to make ends meet. We had 440,000 jobs that were dropped off of the numbers for 2023 as they adjusted them quietly in January of 2024. Sorry, we made a mistake. 40% of all the numbers, all the jobs that were supposedly created. They continue to tell us that inflation is under control, but yet, oh, lo and behold, now you're getting guys like Larry Summers who are saying, don't be surprised if we see a rate increase next time, not a rate decrease. And all of the betting odds are that, no, we're not going to see 4 rate decreases. We may see 1 or 2 and maybe none. So everything they have told us, going all the way back to Bernanke telling us the subprime crisis was contained, only to see days later it all blow up, or all of the nonsense about no inflation, transitory inflation, structural inflation, it's under control, it's not under control, rates are going to, I mean, everything they tell us has been wrong. And I just think it's important for people to take a step back and ask, you know, has inflation gotten any better? How do we pay off all of this mountain of debt that continues to increase as the world is shedding treasuries? Is BRICS for real? Is the possibility of over 50 countries signing on to BRICS by October a big deal? Of course it is. And the election and all of these things that are happening and spinning out of control, and yet we're very calm and quiet, and in the middle of this chaos all around us, we're sitting in the sweet spot in the eye of the hurricane. And I would implore people to, you know, take a step back and do a little bit of their own soul searching and digging, because I will tell you in my gut, I believe that the next several months will be the busiest, craziest of my career. And I unfortunately think that will come, you know, as a result of a myriad of things that may not be super pleasant for the economy, for the banking system, for the dollar, and for this country. And I wish my feeling was better, but that's why I say to you, Dunnigan, it just blows me away how quickly people forget where we are and go back to hope springs eternal and green shoots abound. I don't think we're there. I don't think we're out of the woods, and I think it's time to actually start ratcheting things up with everyone's portfolio, and because I think this fall things get really nutty, and that's if we have an election. That is one last thing, and that is 12 million people have entered this country illegally. If you watch the video from the sheriff from Ohio, who says they just met with the FBI, 300 sheriffs, and they were told it's not a matter of when, if, but when something happens. If 1% of those 12 million people have ill intentions, that's 120,000 people who want to do harm in this country. That's 1%. 1/2 of 1%, 60,000 people. I mean, you're talking, this is not something that should be overlooked on top of everything else. And then all of the commercial real estate starting to reset, and these businesses that go out of business in the inner cities and all the businesses around it. This is not the time to think that everything is on the mend. This is a time to double down and really ratchet up your own portfolio, your own house, and try to build a community best you can. And I appreciate being able to come on this show and talk and be honest. And I hope I'm wrong. Something tells me I'm not.
I would like to augment that, guys. You all know we've been here since 2013, originally as reluctant preppers. And the whole idea of preparedness is to position yourself with the assets that you need, the skills that you need, the connections and the relationships that you need, the physical and spiritual preparedness that you need prior to, not after, not during, but prior to when you really need it. So everybody here, please take on the responsibility to reach out to 1 or 2 or 3 people this week try to suggest, share a link to our channel, share a link to other channels that you know that are in tune. We can't let people just sit there on the tracks with the train coming and be hurt by this if there's something we can do to help spread the word. So please reach out to those. I know you're trying, a lot of us are. Maybe think of somebody you haven't reached out to yet that you could this week and see if you can spread the word. Andy, on behalf of everyone, I wanted to thank you for being here. We have one last personal sign-off question here from Jim Montgomery. Andy, what is your golf handicap?
9.5.
There you go, Jim. Can't get more personal than that.
It's all good. It's coming down. It's coming down.
Awesome.
Remember, I lived in Minnesota forever, so
Now,
in the couple of days a week I'm able to golf, I'm working hard at bringing it down.
awesome. Well, thank you everyone for being here. You're the ones who make it happen. Make sure if you don't want to miss a single episode with Andy, you go to libertyandfinance.com, put in your email address, make sure you click submit, and then confirm on the confirming email. You'll get every single episode with Andy and any of our other guests and every weekly special. Don't miss it. Andy, thanks for being here on Liberty and Finance.
Take care, everybody.